Hello, everyone. This is Toyin Ojo with the Victor Group, and I am here to tell you specifically about one of my niches, which is first time home buyers. I love, love, love working with first time home buyers for the most part. Um, I love giving knowledge. I love helping people realize they're doing for the first time. That is actually one of my passion. So what I want to take a few minutes to talk to you guys about today is, as first time home buyers, some of the things, that different aspects of the home buying process that you should consider. The first thing obviously is we talk about getting financing. When you call a realtor, when you call me in the state of North Carolina, the first thing I'm going to tell you is, if you're ready, let's get you pre-approved. And pre-approval basically gives you a leg up. It lets people know when you put in an offer that you've already been vetted by the banks. And even more importantly, it lets you know what you can comfortably afford, right? So let's talk about financing options. You have three or four different financing options, different types of loans. A conventional loan are loans that are provided by private lenders. They're typically not insured by the government, and you can get a conventional loan of as little as 3% down. There's a big misnomer out there where a lot of people think you gotta have 20% down to buy a house. This is simply not true. There are actually loans that we'll talk about in a few minutes, different types of loans. There are some loans that are 100% that you don't even need any money down. And in this instance, if you were to get one of those, you can actually get in North Carolina a first time home buyer grant of up to $15,000 that will help you pay for your closing costs. So I've had actually a lot of first time home buyers who are actually leaving the closing table with a check in their hand. So that's a conventional loan. The second type of loan is an FHA loan. An FHA loan, it is insured by the government, and typically they're used amongst first-time home buyers because it's a 3.5% down payment, so it's a lower down payment, number one, and they're a little bit loose on their credit requirements. So you don't have to have a 700 credit. If you have a 640 or 650 credit, you could qualify for a conventional loan. Hopefully all your debt to income matches up, and we'll talk about that later. Then, of course, you have a VA loan, which is for veterans. Thank you for your service, by the way. So a lot of veterans, you can qualify. A veteran anywhere that's actively serving in the military. If you're retired, if you're no longer in the military, and you have those options, you have veteran benefits, and VA loans are one of them. And then, of course, you have what we call the USDA loan. And these loans are provided by the U.S. Department of Agriculture, and they tend to they're designed to really help low income families that want to purchase in the rural areas. That's why it's called USDA, because it is location specific, and the areas where you want to purchase has to fall within that USDA guidelines. Okay. So also now moving down forward, I want to talk about the first time homebuyer grants. The state of North Carolina has several grants that are specifically designed for first time homebuyers. The most popular one, the most people get, it is income specific, and you do, depending on where you purchase, their income max, that if you make as much as a certain amount, you will not qualify. But those are high, they're in the 100,000s. So like if you're buying in Wake County, I think that it's the income is like maybe 150 or 160. So if you make less than 150 or 160, you automatically you automatically qualify for that grant. And that grant, it used to be $8,000. They have now, as of this month, they've now moved that now to $15,000 because, of course, as we all know, homes have become more expensive in our area. So they're answering the call, and they are being responsive to the market, and they've increased that to just almost double, from 8,000 to 15,000. And like I said, most people will qualify that for that. And then there's several different other types of grants. There's one called the CPLP, which is the Community Partnership Loan Program. And that's your big fat loan. Like you can get up to 50, 60, sometimes even 70,000 for those, depending on where you're purchasing. Those also have income requirements, and those also have and when they do the income requirements, they do household income. Depending on how many people in the household will be bringing in income, and then based on how many people live in the house. To find out what those income requirements are, I will fix you up with my lenders who are specifically well versed in doing these types of loans. I work with a couple of really, really good lenders who know these loans like the back of their hand, and they will walk you through the process. Okay. And so let's talk about choosing your first home. So when you're buying your first home or when you're choosing your first home, the first thing I always tell my first time home buyers is it's nice to dream. Everybody wants that $1 million mansion in Chapel Hill or in Cary or in Fuqua or in Apex. But this is your first home. You're not going to get everything you want in your first home. Most people don't get, I don't care if you're buying your fourth or fifth home, most people don't get what they want in in the home that they're buying, unless of course you custom build. And if you're custom building, I suggest if you're going to do that, at least buy a few homes so you kind of understand the process and that you have a better idea of what you want, right? So in your first home, the two most important things in your first home is, I always tell people, make two lists. Make your must-haves and your nice-to-haves. So we're going to look at your must-haves first and make sure that we get as much of that as possible. And then if the budget permits, then we could look at nice-to-haves. But when you're choosing a home, if you're a couple, like, if there's just two of you, and if you have, furry children, if you have four-legged children, particularly dogs who are big, instead of looking for a 4 or 5 bedroom home, you might want to look for a 2 or 3 bedroom home, but look for one that has a yard that will accommodate your pets. Okay. So again, it's just real important for you to consider your needs and determine what's most important for your family at that time. And also, I also like to tell people, consider your resale value. Like, purchase a home in an area that hopefully would be, when you get ready to sell. The studies show that the average first-time home buyer stays in their home 5 to 7 years. So in the next 5 to 7 years, you're going to want to sell that and possibly upgrade your home. So you want to make sure that you're buying in an area that is popular, will remain popular and desirable, and you want to buy a style and a type of home that will be desirable to others in the future, so that way you widen your buying pool when you get ready to sell it and go on the market. Okay. And then the next thing, for a first-time home buyer, you got to make sure that we're checking our credit, right? You got to make sure that your credit is up to par and that you can get a loan. If you want to get a house in the next 6 months, and if your credit is 550, you have a lot of work to do. If you want to get a loan in the next 3 to 6 months, if your credit is 640, 650, you're good. But the thing is, you got to make sure that you're checking your credit and that the health of your credit, and that depending on your time frame, that you have enough time if you need to fix anything on your credit. So check your credit score. It's a major factor in getting approved for credit. If you can, part of what determines, even if you have a good credit score, part of what determines how much you get approved for will be your debt to income. They call it your DTI. So the lower your debt to income is, obviously, the more attractive you look to lenders, the higher your approval amount would be. So if you have the luxury and if you can pay down some debt, so that'll make your debt to income ratio a little bit more attractive to the seller. And of course, avoid getting new credit. The only time it's good to get new credit is if you're trying to build credit, right? Or if you have more negative credit than positive credit. So in that case, a lender or a credit expert will advise you to open 1 or 2 credit card lines, right? And tell you specifically what you need to do. Because if you open up a couple of new credit lines, and if your utilization if your max on each credit is, let's just say, $1,000, but if you keep your utilization to under 20%, which is $200 of that $1,000, if you charge $200 and you pay it off every month for the next 3 to 4 months, that's going to increase your credit score exponentially. So the only time a credit expert will advise you to open new credit is if you're trying to establish or raise your credit score. Okay. Now let's talk about down payment options. Down payment is just what it is. You're going to need some money, and you're going to need some savings to get into a house. Even if you end up using the grants, To get under contract in the state of North Carolina, you're going to need to write a due diligence check and you're going to need to write an earnest money check. So those, you got to have those funds available. And again, depending on what type of loan you get, the lender may want to verify what they call reserves in your account. You may not need it to take to closing, but that lender may want to see reserves in your account in order for them to give you a clear to close. So down payment options, there's of course the traditional savings account. You can always use your savings account. You can use any type of a Roth account, your Roth IRA, or any retirement account that you have. Those are assets that the lenders will look at when they're looking at your liquidity to be able to make good on closing on this loan, right? And some lenders will accept a gift. If you have mom and dad, are always a good source of a gift. Friends, anybody that wants to gift you money towards purchasing your home, there are lots of lenders that will just allow a gift letter, and they'll accept that as long as it's not another debt that you're creating. They will accept that for you to use as part of your down payment or on your closing cost. So let's talk about a couple of different types of loans that are out there, right? So you have what we call a fixed rate mortgage loan. And a fixed rate mortgage loan is exactly that. It's a loan that you get for the life of the loan. It's one rate. That rate is fixed. It never changes. The only variable on your loan, your principal and interest are going to always remain the same. And the more you pay that down, obviously the principal goes down, the more payments you make. The only thing that's a variable is going to be your taxes and your insurance. Obviously, taxes go up. As property values go up, your taxes will go up. As property values go up, insurance will go up because it's going to cost more money to replace that house because it's now worth more. So, of course, your insurance will go up. So, your mortgage payment may go up, but your principal and interest on a fixed rate loan will always remain the same. That's a fixed cost. It's a fixed price. You can take it to the bank. That does not change. Then you could call what they call an ARM, which is an adjustable rate mortgage. An adjustable rate mortgage is just what it is. You can do a 3-year, a 5-year, or a 7-year adjustable rate mortgage. Just if you decide to go that route, your interest rate will be lower than a fixed rate up front. But once it matures and that 5-year runs out or that 7-year runs out, then your interest, obviously your payments will go up because at that time it'll be whatever the prime rate is at that time plus a certain number of points. But those things will be specifically spelled out to you by the lender before you make a decision on which loan you want to go with. All right. So just make sure that you have those. And of course, I'm going to be around. I'm going to be able to help you. The lenders, if you work with the lenders that I know or any lender that you choose to work with, we'll sit down or we'll have a Zoom call or whatever, and they'll explain everything to you. And I'll make sure that you understand everything before you make a final decision. And then another real important thing to consider, if you're buying a home, hire a realtor. Our services are free to you. So hire a realtor. It costs you nothing, and we are worth everything. Well, we should be, the ones that are doing their job. Me, I'm worth more than my weight in gold, and that's a lot of weight, I promise you. But anyhow, so at the end of the day, a realtor, you've got to have an advocate that is advocating for you. That seller has a realtor. The seller that's selling the house, they have a realtor. The builder, if you're in a new construction, the builder who is selling the house, they have a realtor. Don't you think, especially if this is your first time, do you not feel like you too should have someone who's going to represent you, and you and that person, your realtor, will speak with one voice? But you need to have a realtor who's going to be advocating for you, who's going to be speaking on your behalf, who's going to be checking on everything, making sure your inspections are on point, making sure if it's a resale, who's going to help you negotiate any repairs if needed. You need a realtor who's going to help you work with the attorney, with the lender, with the title company. There's so many moving parts to buying a home that it's really a tough thing to try to do it on your own. A lot of people walk into new construction, they sign a contract with the on-site agent without fully understanding that that on-site agent works for the builder. They do not work for you. They're not looking out for your best interest. They're looking out for the seller's best interest. So believe me when I tell you that it does not, you should have a realtor. I can't stress that enough. You should absolutely have a realtor who's working for you on your behalf. All right. So those are some of the things that are very, very important to consider as a first-time home buyer, or when you're buying at any stage, or if you're selling. You've got to make sure that all those things that we just talked about, that those are on your items list, and that those things are being reviewed from time to time. Please, if you're even having thoughts of buying a home, please give me a call. Let's get started on the process. I'm Toyin Ojo with the Victor Group. You can reach me at 919-903-4125. Good talking to you guys. Bye-bye.